Welcome to Takes Invest. We talk about investing, finance, and professionalism. As a recording time of approximately noon on the Eastern Time, Ethereum currently $3,756, up about 3.5% so far. With respect to overall crypto market, see clearly beside polkadots, and in addition to the equity market, we're bright green today. Seems like this sector rotation or a delayed Santa Claus rally is happening today. And what is driving this surge, right? Obviously, one is window dressing affectation among the hedge fund community. We've seen that very prominently to the vulnerable small cap high growth stocks, across the spectrum, just to name a few, like Neo and Virgin Galactic are, some of the, more prone to volatility. Neo is currently up about 12% so far. Just hovering above the $31 mark, while Virgin Galactic is also up about close to 7% respectively. So it seems like there's a sector rotation going on to the small cap high growth stocks, but also the Chinese stocks, which are more prone, again, to volatility. So what's driving this, affectation among the market, right? So we have heard from the economical reports early this morning. And the number that came out from the report is really, laser focused around the jobless claim number. And it seems like the number came out to be a little bit more optimistic than expected, based on obviously Wall Street expectation. And just to look at it on a high level synopsis, the number came out to be 198,000 jobless claims on a week of December 25th, basically last week. And the number is lower in comparison to Wall Street forecast of the 205,000, which is, if you compare that in basically the last 52 years, it's the lowest ever since 1969, right? So if you look into this a little bit more specific as well, the numbers actually dropped to 1.72 million for their lowest total since March 7, 2020 as well. So the numbers definitely came out to be a lot more optimistic than expected, which is great, right? Another confirmatory signal onto, reviving the rotation and recovering the market as a whole, right? However, with the more prominently surging power on the equity market, it will obviously deplete away from the crypto side of the house, right? So we are, despite surging across the market, is a lot more prominently displayed among the equity side of the house, right? So with respect to Ethereum, as I'm recording around noon again, it's 11:55 a.m. on the Eastern Time right now, is trading at about $3,757. And across the the news around Ethereum, I don't see any specific news that's really cultivated around Ethereum. So I'm just gonna dive straight into the technical analysis. I mean, beside the jobless claim number that we already talked about, right? So right now we are above obviously the 3,650, which is the level of consolidation that we have tested and bounced back off from, right? And congrats to all of us that actually bought in the 3,650. You guys are taking the right logical steps, and you guys are rewarded nicely at the moment, especially at, ending the year on the good notes, despite there's still some uncertainty cultivated around the Omicron, which has been, the whiplash that we've been experiencing collectively for the last couple of days so far, right? So right now, it seems like we are at the 41 out of 70. So with the, we're optimizing a little bit better now. Definitely become more normalized than days before. We are also seeing some signs of curvature on the MACD front, right? Slowly curving up. So it seems like the recovery is definitely coming. So the critical level that we need to watch out for is for us to get back up to the 3,843, which is the level of support we need to get above. As we get there, we should technically continue the buying pressure from here, right? So this is a good sign and is logical because again, right, the window dressing affectation is still happening, right? The hedge fund has to do what they need to do to make the return on their portfolio look more, promising and look, demonstrate some, that they have done the job for their as a fiduciary duty for the investors, obviously, right? Respect to Bitcoin is currently up about 2.5% at the moment. We bounced off from the 45,852 with the 42 out of 70 right now. So again, same comparable to the Ethereum side of the house. But interesting thing is that the line that is on the MACD front, the MACD is on top of the signal line, while in comparison to Ethereum, it's the opposite. So it seems like the momentum is a little bit opposite, but the characteristics of the chart looks comparable. So which is a kind of an interesting juxtaposition that we need to be aware of. But we are showing some signs of curvature at the moment. But what a golden cross makes sense. I would say in terms of Bitcoin, it's a little bit more bearish in comparison to Ethereum. So I think the Ethereum has a much better shot of actually forming a golden cross and then leap up from there as we break above 3,853. So, but despite all of that, Bitcoin is still a good buying level. So something to look out for. But it is kind of interesting to see that we do have a mini head and shoulder at the moment. So I hope that we actually are able to break above the current level to basically retest the 52 or at least 50,000 all over again. But if we not, we'll see more sell-off. But I don't see the sell-off to be a very prominent one because of the fact that we're relatively depleted right now. So Bitcoin is a little bit more bearish in comparison to Ethereum, which can also question the fact that is that going to drag us all down collectively. But we know that Ethereum, historically was trading, in correlations to Bitcoin, but we're starting to see more and more separations as these two assets start to obviously do their own thing, right? That's why we're seeing a different momentum, despite how comparable the chart is. But if you look deeper into the technical specifics, right, we know that they're separating, which is a good sign. Dogecoin is currently up about 3.3% at the moment. Anywhere from 16 to below would still be a better level with the 42. So similar to how the overall market is trading, I think, 16 to below is still better level in terms of incurring risk, right? Cardano is right now, we are at the 47 out of 70. So I would say anywhere from the 135 to 120. I think 120 is still a better level for us to incur risk. I don't think right now is the best level to incur risk. So I'll wait off until we get to 120. Solana's at 175 right now, just lingering on. It seems like we are trying to sustain to the current level to break above again to the 180, which you saw that yesterday we tried to, but we couldn't get even recovered. So we subsequently leap back down because that's the next level of support based on the historical consolidation. But ideally, right, 155, 133 to 113 is still a better level for us. XRP is up about close to 1% so far. 78 cents is still a better level for us. We are about to form a death cross, unfortunately. So ideally, 78 to 69 will still be a better level for us. So I will put my limit order in just in case it's an insurance, despite how the overall market is surging up right now. I think 78 to 69 is still better for us. So this might be a foreshadow that we might be seeing some sell-off coming. It seems like across the whole entire market so far, Ethereum is still the most bullish of all of us. And then the polkadot right now, again, 25 to below is still better level. We are at the 47 out of 70, so not the best, not the worst. ALGORAND's up about 17% right now. Again, I would not touch this to save your life. This is very, very manipulative. You can tell whatever goes up really, really fast comes down just as fast. You can see how dragged up and how much of a standard deviation of an outlier we're forming at the moment with the 60 out of 70. So I don't need to tell us what's happening right now. We are driving a lot more outlier than the rest of the market. So this is not the best for us to incur risk at the moment. Shiba Inu, anywhere from 29.50 below would be still a better level for us to incur risk. MagTech, anywhere from 175, 143 to 120 would be the frame that I would start dollar cost averaging. We are forming a death cross right now, so not the most ideal level for you to incur risk at the moment, knowing the fact that we're still relatively overbought, right? AVAX up about 1% right now. We formed a death cross recently, so we have a huge leap down as well. So 81 to 60 is still better level for us, knowing the fact that we're still overbought. Luna, up about 2% right now. Not the best. We are having a def cross that's formed right now, so we are still at the 58 out of 70. So absolutely not the best level for you to incur risk at the moment. We're going to sell back down to 62, 52 to 45 from here. With respect to Enron, we are clearly still in a relatively depleted level. I mean, like, definitely not as good as the previous days as we sold down to like the $230. But it's still like a tolerable level, in comparisons to when we were like surging all-time high, right? We depleted because a lot of people took profit because of various different reasons. At the same time, when we were like reaching all-time high, we were clearly extremely stretched up. We were at the 90 out of 70 on an RSI scale, and at the same time, you could see how clearly we were forming an outline on the chart, right? So right now would be the opposite side of the spectrum. I do like the current level in terms of incurring risk at the moment. And with respect to risk management level, these are levels that I identify so far. Like I update this like basically 3 times a day, just to make sure that we teed up on all fronts, right? And with respect to Enron, we are at the fair level. We between the fair and attractive, so I still give the benefit of the doubt that we're still in the attractive level above like basically $10. But I do like a lot of the levels that we at right now. It seems like we're recovering nicely, but it's still uncertain, with respect to the economic outlook going forward, right? It seems like, there's a lot of emotions in play at the moment. We're at the mercies of the media triangulations. And I hope that you guys were able to take the logical risk yesterday or the days before as we were selling down with full panic mode, right? Frankly. And the ones that actually hold on, or the way that you guys call it, diamond hands, right, are getting rewarded nicely right now. So congrats, firstly, and also happy New Year's Eve. Knowing the fact that tomorrow is New Year's Eve, so hopefully they make sense. Really appreciate you for joining me again, and stay subscribed. Take care.